Hello, everyone. Welcome back to my channel. So, in today's episode, I'm just going to give you a quick market update. Now, whatever I say in this episode is not financial advice, and I'd advise you to do your own research before you buy any cryptocurrency. So, in this video, I just want to talk about the up and coming week for the markets. So, I believe this could be the turning point, the reversal that we've been waiting for. So that is because Jerome Powell will be speaking this week, and also we have the CPI data that's going to be released on Wednesday. Okay, let's just dive into the Bitcoin price. So here I am on TradingView, and as you can see here, the price is just in chop zone. It's basically consolidating. And I just drew a box since I put in this high of 73K. It has been just chopping sideways and moving towards the downside for the last 59 days. Now, you have to understand this is very common in a bull market. You go over here. So the last time it consolidated, so it came up, made a high, and then it chopped sideways for like 70 days before it broke out and put in a new high. So yeah, just something to look out for is it's very common. I know it's boring, but it is very, very common for the market, for Bitcoin to chop sideways, to consolidate. So what people say sometimes is the longer it consolidates, the bigger the move, the bigger the impulse move when it breaks out. So also from looking from this chart, you do see the RSI, the relative strength index. I just drew a trend line here, and we did touch like 1, 2, 3, 4, and then it broke out. So again, I just drew another trend line on the RSI, and this is mine. This is on the daily chart. So as you can see here, it touched 1, 2, 3, 4, 5, and then it broke out. And see, it's just coming back to retest that trend line. So this is all looking very, very good. Another thing I do want to add is the EMA. So we'll just turn on the EMA. So this is the 100-day exponential moving average. This line here. And a lot of people say that once it's above this line, you can say that it's in a bull market. And plenty of times in the bull market does come down to test this line. So as you can see here, it just tested it here, and then it bounced off the line and brought it back up the upside. So as you can see, the price is currently coming down to touch this 100-day exponential moving average. So I believe it will chop sideways until we get the CPI report on Wednesday. So I'm really on the lookout for that. But Bitcoin has just been through the halving, which was on the 19th of April. So it is very, very common for it to go to consolidate and maybe to sell off a little bit. But overall, I am still bullish as long as the price action holds this key level here. As long as it doesn't put any daily closes below, let's say, 60,500. And if that is the case, I will be looking for more downside, and maybe we'll come back into this demand zone here. I have marked here at around 53K. Moving on here to Twitter. So basically, this is a tweet here from the Happy Hawaiian. So my CPI forecast for the next week. So basically, so as you can see here, headline CPI. So back in January, it came in at 3.09%. And then in February, 3.15%. And then in March, 3.48%. So as you can see, the CPI, the headline CPI has been increasing over the last 3 months, which obviously is not a good idea because you want inflation to go down. And obviously, Jerome Powell has a target of 2%. So hopefully we do see it tick down or even to stay even. So what the forecasters are predicting, and I like to go with the Cleveland Fed, they usually are the most accurate. So they're acting that the headline CPI will come in at 3.5%. So if it does come in at 3.5, that's roughly the same as March. So I don't think that would be too bad on the markets, especially as long as it doesn't go past 3.5, I think we'll be okay. Now, obviously, I would like to see it go lower. And then with core CPI, again, you can see the same thing. In January, it was 3.86. It did tick down a little bit in February to 3.75, but then it ticked back up again to 3.8% in March. So the Cleveland Fed is predicting that we will get a reading of 3.65% of course CPI. So And if that's the case, that would be lower from the previous month. So that would be pretty good as long as we don't see more uptick. This guy's predictions, Happy Hawaiian, he actually thinks that we will get a huge drop in the inflation numbers. So he's predicting that headline CPI, he thinks it will come in at 3.34%. And he reckons then that the core CPI will come in at 3.74%. Now, I wish this guy is right. And if he is, and if that is the case, I could see all risk assets like Bitcoin and the altcoins to have a nice pump. So moving on here, this is just another tweet from FinPal. So last month's US March CPI data came in higher than expected for the fifth consecutive month, leading the market to largely abandon hope for a near-term Fed rate cut. Reducing expectations to just one rate cut by year end, President Biden previously declared that the Fed would lower rates by the end of this year, clearly aiming for a pre-election move, as any action after November 2024 would benefit Trump. Facing the up-and-coming election, the Fed is more politically charged than ever. Would Biden really allow the Fed to maintain high rates and suppress consumer sentiment ahead of the critical November elections? Financial blog Zero Hedge believes the answer is no and expects the up-and-coming April CPI report to deliver a downside surprise. They point to the lagging owner's equivalent rent, OER, which is collapsing over the next 9 to 12 months. Both rent and OER inflation are expected to drop significantly despite current rent increases. Stephen Englander, Chief FX Strategy at Standard Chartered, noted that Fed Chair Jerome Powell stated during the May FOMC press conference that lower housing costs could reduce core inflation. Englander's regression analysis found that OER is expected to decline sharply in the coming months. This analysis based a new tenant rental data compiled by the Fed and the Bureau of Labor Statistics shows the first quarter rise was anomaly, and downside pressure will turn soon. The analysis shows the drop in OER could reduce CPI by 0.06% monthly, pulling core inflation from 0.3 to 0.2 or even lower. Englander believes such improvement will prompt expectations of a return of disinflation and a level low enough for the FOMC to lower interest rates. However, Englander cautions that his conclusion carries two significant risks. First, the experimental rental data from the BLS and the Fed are quarterly. So while his quarterly forecast may be accurate, the monthly forecast could be off. Second, high demand for single-family homes may disproportionately increase rents. Despite the risk, Englander notes Powell's confidence in OER inflation decline and seems to see this as strong justification for a rate cut. Ultimately, Zero Hedge points out that the 12 to 18-month lag between OER data and real-time indicators could mean that the Fed will be forced to hike rates again when rents surge. So basically, the Federal Reserve has a dual mandate. So basically, first thing is they have maintained price stability. So basically what they want to do is keep inflation at 2% level. So obviously currently it's sitting at 3.5, which is not good. So their target is 2%. So they want to see inflation come down to their target. Their second mandate is maximum sustainable employment. So there last week, we did see the unemployment rate tick up a little bit. So obviously that is not good. So that's signaling that we might fall into recession. So it's basically a juggling act. So basically, if they tighten too much, we might fall into a recession. And then also inflation, you don't want to see that rise because then it could turn into stagflation. So basically, this reading on Wednesday really could make or break the markets. So what we want to see is inflation come in as expected, which would be roughly around the 3.5%. Or even lower. So if it comes in lower, then boom, this is really good for the markets and we will see a pump. And then it also will give Jerome Powell enough evidence for him to cut rates. So this is another tweet here from the crypto chief priest. So basically, so much noise about everything going on right now with financial markets. But the fact is that long-term Bitcoin holders just don't care. Owners of BTC wallets with 100 plus coins have continued to buy and actually added 100k Bitcoin since December. I'm comfortable with my bag. They won't shake me out. So yeah, it's always clever to see what the whales are doing. And as you can see from on-chain, the whales are just stacking. There is this wallet that they call Mr. 100, and he on average buys 100 Bitcoins every day. And as the Bitcoin's price comes back down to the 60k level, he buys a lot more than 100 Bitcoins a day. He just scoops the dip. So he seems very, very confident in Bitcoin moving forward. And some people are suggesting that it's actually a nation state, maybe Qatar. So I'm sure we will find out maybe later on in the year. So this is also another tweet here from Watch Guru. Just in, largest US bank JP Morgan Chase discloses buying spot Bitcoin ETF. Now, this is quite funny because this is a few months ago, back in April the 18th, JP Morgan CEO says Bitcoin is a fraud and is a Ponzi scheme. And then fast forward a couple of weeks, JP Morgan Chase discloses spot Bitcoin ETF portfolio. So Jamie Dimon is notorious for constantly trying to FUD the price. And obviously he's doing that intentionally because he's obviously buying Bitcoin at a lower price. Just in, so Chinese fund House Harvest Global Investment, issuer of the Bitcoin spot ETF in Hong Kong, wants to exceed the accessibility of its products to mainland China through the Stock Connect program. So this would be unbelievable if this happens. And a lot of rumors are spreading that it's going to happen sooner rather than later. So if this happens, this would be great for the Bitcoin price, because this will give access to other people living outside of Hong Kong in mainland China, get access to the Bitcoin ETF. And we do know that China is the second biggest economy in the world, obviously the US being number one. So this is another thing I just want to bring to your attention, Cointelegraph. All coin prices may surge as M2 money supply turns positive year over year, hinting at investors' interest in inflation hedges. With the US economy's money supply rising, altcoins and meme coins could see increased investment fueling the onset of alt season. So obviously you see this from this chart here. This is the M2 money supply has flipped positive. So obviously Bitcoin put in its all-time high back in 2021. And ever since then, the Federal Reserve has been doing quantitative tightening. So basically what they're doing is they're taking money out of the economy. And obviously Bitcoin is a function of liquidity. So the more liquidity that's in the market, obviously that is good for its price. So as you see this from this chart here, that the M2 money supply is now flipped positive. So this means that the Federal Reserve is printing money. So this is good for Bitcoin and risk assets. So this is another tweet here from Ted Talks Macro. I really like this guy. I think you should definitely give him a follow. So amazing cross-border caps, 65-month liquidity cycle theory, perfectly synchronized with crypto liquidity. The next cycle high is due in June 2026. We'll have to wait and see. But as you can see here from this chart, this is basically the liquidity cycle. So obviously it's very similar to the M2 money supply. So basically, as this rises, the Bitcoin price rises. So as you can see here, it's starting to rise, starting to pick up. So this is obviously good for Bitcoin's price action. He also put out this tweet here back in May 5th, which I think is nice to see. So you've heard of sell in May and walk away, but what about buy in May and walk away? Bitcoin update. So he did make a video about this. But basically what he's trying to say is he's talking about market structure. So basically, this was the sell-off after the spot ETF launched in the United States. And it did break structure, come back, and then moved up the upside. So basically, he's just waiting now to see if it breaks this structure here at 68K. And if so, we're off to the races. Okay, so Bitcoin ETF flows. So obviously, I like to check this. And we did have a lot of negative outflows back in the 24th of April. At the end of April, we had like 1, 2, 3, 4, 5, 6, 7 consecutive days of outflows. And obviously, this has really suppressed the Bitcoin price. But we did see something very interesting last week. We did see that Grayscale did have its very first inflow. And obviously, if you've been watching my channel, you know that I've been covering Grayscale, and they have been, ever since the Bitcoin ETF has been launched, they have just been selling and selling and selling all of their Bitcoin out of their spot ETF. They've actually sold more than half of their holdings. So it is nice to see that they did have one inflow here back on the 3rd of May. But again, and they had a second one then on the 6th. But again, they are starting to sell again, and you've seen that on the 7th they had an outflow. It was there was nothing happened on the 8th, and then obviously in the last 2 days they had 2 outflows again, and obviously on the 10th of May was a quite substantial outflow. So obviously this will eventually come to an end, and when it does, obviously it'll be way better for the Bitcoin price. So there you have it, folks. That is your market update. So obviously all eyes on Wednesday with the CPI report. I think this is going to make or break the market. We're obviously hoping for it to meet expectations, or if it came in lower, obviously that's way better. But obviously, if it comes in higher, obviously, I don't think the bull market is over. I just think that there'll be a market shift, and I think a lot of people would be going risk off for a while, and maybe it just might extend the bull market. Like, obviously, in my theory is that the bull market will continue throughout the summer, and I think it will peak maybe sometime November this year. But if we have inflation being sticky, and then we have high unemployment rate, we will be in a bad situation. So obviously we're just going to have to wait and see. But if the inflation comes in high, I think it'll just push the bull market out a little bit, and probably will peak out then maybe in 2025. We will have to wait and see. So anyways, if you got value of this one, please go down, hit the like, hit the subscribe, and I will see you in the next video.